In other news, a state-run policy research institute believes Korea's economy will remain in the doldrums during the first half of this year, but will see a tangible rebound in the second half on the back of greater market activity in neighboring China. Our Finance Ministry correspondent Rae-hyun has details.
The economic slowdown is worsening in South Korea. That's according to the Korea Development Institute in a report released on Thursday. Considering this, the institute lowered its economic growth forecast from 1.4 to 1.1% for the first half of this year. This comes after sluggish export figures for the country, with lower chip exports being one of the major factors. Exports overall last month dropped 16.6% compared to a year earlier. Specifically, chip exports were down over 44%, steel dropped almost 26%, and petrochemicals plunged 25% on year. The country's quarterly GDP growth rate for the fourth quarter of last year saw a drop of 0.4% compared to the previous quarter. Domestic consumption in December dropped 2.5% as consumer prices remained high. Considering a rise in public utility charges, the institute also raised the inflation forecast for this year to 3.5% from 3.2%. In terms of the global economy, the institute reported a temporary shrink amid an overall drop in trade and the rapid spread of COVID-19 in China. But it also mentioned that easing inflation in many countries and the weakening U.S. dollar show signs of a possible recovery for the global economy. Meanwhile, the institute expects South Korea's economy to see a rapid recovery in the second half of 2023, keeping its economic growth forecast for 2023 as a whole at 1.8%.
Although the first half of this year may see a deepening economic slowdown, the second half may see a quick recovery. Reopening in China may fuel South Korea's exports to reach over the economic growth forecast.
However, the report added that as this forecast depends on external matters such as China's economy and rate hikes in the U.S., there is still a high chance that Korea's economic recovery could be delayed. It also mentioned that housing market declines may also be a risk that could affect consumption and investment in construction. Rae-hyun, Arirang News.